After hitting its highest level since election night, is gold experiencing a knee-jerk reaction here? Joining us today is Gary Wagner of thegoldforecast.com. Gary, welcome back to the show.
Great to be here. Thanks for having me.
Gary, let's talk gold here. We were off to a good start here. We're having a bit of a knee-jerk reaction now. There was a longer trend, a positive bullish movement for gold. How do you see things now, Gary?
Well, when we look at the recent activity, of course, the most noteworthy characteristic this week was in the futures markets in gold midweek. We actually took out the former yearly high when gold prices went to $12.9820, I believe, a full $1 to $2 above the former high, which happened on April 17th.
Now, Gary, a lot of people were eyeing the 1300 level. Is that still a key level for you? We were talking 1300 and a possible 1377. Has the recent movement changed this for you now?
Long term, it has not changed it. The key to any rally is that you're going to have a series of price ascents or run-ups, and then you will have subsequent corrections come immediately following that. And the key to that movement is that as it rallies, you gather more steam, so to speak, and have a greater price move than when it corrects. And that way, in essence, what you're doing is you're taking 3 steps forward and 1 or 2 steps back. So in that way, I believe the rally is still intent. Now, at any given point in time, we can experience a correction within that overall rally. And the way that we want to determine whether or not a market is rallying is to kind of step back and see if we've had a series of higher lows as well as a series of higher highs.
All right, Gary, so you're still bullish.
I am still bullish. We might go into a period of consolidation here and correction, but overall I am bullish. We've challenged the $1,300 mark. I still believe we can take that out this year.
All right, let's take a look at the dollar now. Contrary to the post-election consensus outlook for a stronger dollar this year, the greenback has slumped since January. Is this a clue for further weakness? Can we find a clue for further weakness from gold prices, Gary?
Well, in terms of the dollar itself, it has been kind of swimming against the tide in that most analysts were looking for dollar strength, especially since it is such a high probability, according to the Fed tool, that the Fed will implement a rate hike this month. And so what we've seen is a weaker dollar and yet a higher probability of a rate hike, which is kind of confounding because they typically don't go together.
All right, Gary Wagner, thanks so much for your thoughts today. We'll see you next week.
Have a great day, and thanks for having me. Bye-bye.
Thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow. Hey!